In an unexpected twist that underscores the ongoing tensions surrounding cybersecurity and international relations, a North Korean agent attempted to infiltrate a popular cryptocurrency firm by applying for a job. The incident, which highlights the vulnerabilities in the hiring processes of tech companies, was foiled by a seemingly innocuous question about Halloween. This incident raises significant concerns about the intersection of national security and the rapidly evolving world of cryptocurrency. According to reports, the agent was in the running for a position at the firm when interviewers posed a straightforward question regarding the holiday. The candidate's inability to provide a satisfactory answer raised red flags, ultimately leading to further investigation. This incident exemplifies how simple queries can uncover potentially serious threats, particularly in an industry that is often criticized for its lax security measures. Experts have long warned about the risks posed by state-sponsored cyber activities, especially from nations like North Korea, which has been known to leverage cybercrime for economic gain. With cryptocurrency's decentralized nature and the anonymity it offers, it has become an attractive target for illicit activities, including money laundering and funding for rogue states. The attempted infiltration of this crypto firm is a stark reminder that the stakes are high and the consequences of such actions can reverberate through the global financial system. As governments and companies scramble to enhance their cybersecurity protocols, the incident prompts a deeper reflection on how the tech industry must adapt to these evolving threats. This case illustrates that even the most cutting-edge firms can be vulnerable to traditional espionage tactics, noted cybersecurity analyst Jennifer Lee. As the landscape of digital finance grows, so too does the need for robust security measures that extend beyond just technology. The implications of this incident extend beyond just the immediate threat of espionage. With state-sponsored hacking becoming increasingly common, companies in the cryptocurrency sector may need to rethink their hiring practices and security protocols. Experts advocate for a more stringent vetting process that includes not only background checks but also assessments of an applicant's knowledge of industry-specific norms and cultural references, which could serve as a deterrent against agents attempting to pose as legitimate candidates. Looking ahead, the cryptocurrency industry must grapple with the dual challenge of fostering innovation while ensuring security. As regulators worldwide begin to take a closer look at the sector, incidents like these may drive more stringent oversight and compliance requirements, fundamentally altering the landscape in which these firms operate. Moreover, as the geopolitical climate continues to shift, the potential for further attempts at infiltration by hostile actors remains a pressing concern. In conclusion, the thwarted infiltration of a cryptocurrency firm by a North Korean agent serves as a cautionary tale about the vulnerabilities inherent in the industry's rapid expansion. As firms strive to balance growth with security, it is clear that vigilance will be crucial in safeguarding not only their assets but also the integrity of the broader financial ecosystem. The future will undoubtedly see a heightened focus on security measures as both technology and tactics continue to evolve in this high-stakes arena. As the cryptocurrency landscape continues to evolve, recent developments surrounding Bitcoin have sparked renewed interest and speculation among investors and industry experts. With Bitcoin's price reportedly rebounding significantly, discussions regarding its long-term viability and the implications of this resurgence are heating up. Amidst this backdrop, various stakeholders are expressing their opinions, from tech giants to government officials, each contributing to the narrative surrounding the digital currency. On May 3, 2025, Bitcoin witnessed a notable surge, prompting analysts and enthusiasts to wonder if this rebound is just the beginning of a more profound market shift. According to data from Yahoo Finance, Bitcoin's recent price movements have raised optimism, suggesting that broader acceptance and integration into traditional financial systems may be on the horizon. Investors are particularly intrigued by comments from industry leaders about potential technological advancements that could enhance Bitcoin's utility and stability as an asset class. Meanwhile, the political landscape remains fraught with challenges. Arizona governor recently vetoed a bill aimed at establishing a state-backed Bitcoin reserve, labeling cryptocurrency an untested investment. This decision highlights a growing apprehension among lawmakers regarding the regulatory framework surrounding digital currencies. Critics argue that such hesitancy may stifle innovation and hinder the state's ability to attract tech-forward investments. In a statement, the governor emphasized the need for a cautious approach, stating, "We must ensure that any investment is backed by solid financial fundamentals rather than speculation." Adding to the complexity, tech giant Apple has quietly confirmed plans that may significantly impact Bitcoin and the broader cryptocurrency market. According to a report from Forbes, insiders described these developments as a huge game-changer for digital currencies, suggesting that Apple's involvement could lend greater legitimacy to cryptocurrencies. The tech community is abuzz with speculation about how Apple's innovations might integrate cryptocurrency into its ecosystem, potentially driving more mainstream adoption. In tandem with these market dynamics, voices from the cryptocurrency mining sector are also contributing to the dialogue. A recent statement from a Lending executive suggested that miners should consider operating in depreciating currencies to offset costs more effectively. This perspective highlights the ongoing challenges miners face amid fluctuating energy prices and the need for sustainable operations. As energy consumption remains a contentious issue within the cryptocurrency space, finding efficient financial strategies could be crucial for the long-term success of mining operations. As these developments unfold, the future of Bitcoin remains uncertain yet intriguing. The interplay between regulatory measures, technological advancements, and market sentiment will undoubtedly shape the trajectory of Bitcoin and other cryptocurrencies. Investors and analysts alike are keenly watching these trends, hoping they signal a more stable and integrated future for digital currencies. With major players like Apple entering the conversation and political leaders grappling with regulatory frameworks, it's clear that the next few months will be pivotal in determining whether Bitcoin's recent rebound is indeed a precursor to a more sustained resurgence in the cryptocurrency market. In recent days, the intersection of cryptocurrency and politics has taken center stage, particularly with the emergence of a meme coin linked to Donald Trump. The situation has sparked a flurry of activity, highlighting the growing trend of crypto investments among high-profile figures and the potential implications for both the political landscape and the financial markets. The Donald Trump meme coin, which has gained notoriety for its connection to the former president, recently hosted a dinner event that drew significant media attention. This dinner not only served as a networking opportunity but also as a platform for promoting the cryptocurrency in a setting that many have likened to a grift at the White House. As attendees gathered, the atmosphere was charged with speculation over the coin's potential, with some analysts suggesting it could serve as a new fundraising mechanism for political campaigns. "It's a fascinating blend of digital currency and political branding," noted one financial expert, highlighting the innovative yet controversial approach to campaign financing. In a related development, reports have surfaced indicating that the Trump family's net worth has surged by an impressive $2.9 billion, largely attributed to their investments in various cryptocurrencies. This substantial increase raises questions about the influence of digital assets on wealth accumulation and the ethical implications of political figures profiting from such investments. An unnamed source close to the Trump Organization remarked the family's strategic entry into the crypto market has positioned them favorably, but it also raises eyebrows regarding the intertwining of finance and politics, adding another layer to this complex narrative. A recent report detailed a $2 billion investment deal backed by Emirati investors that includes a focus on the Trump family's crypto ventures. This deal underscores the global interest in the intersection of cryptocurrency and high-stakes investment as international players look to capitalize on the burgeoning digital currency market. This partnership exemplifies how crypto can transcend borders, drawing in capital from diverse sources, said a market analyst, emphasizing the implications for both the Trump brand and the wider crypto ecosystem. Moreover, the excitement surrounding the Donald Trump coin has triggered a remarkable stock rally for a lesser-known company that has aligned itself with this crypto endeavor. As investors flock to capitalize on the speculative potential of the meme coin, the stock's unexpected surge reflects the volatility and unpredictability of the cryptocurrency market. It's a classic case of market sentiment driving stock prices. Often with little regard for the underlying fundamentals, noted a financial strategist warning investors of the inherent risks involved. As the events unfold, the implications for both the political and financial arenas are profound. The convergence of cryptocurrency and political fundraising could reshape campaign strategies and financial regulations in the future. Observers are keenly watching how these developments will influence public perception and regulatory scrutiny of cryptocurrency, especially as more political figures engage with this digital frontier. In conclusion, the recent activities surrounding the Trump meme coin and the Trump family's cryptocurrency ventures signify a remarkable moment in the evolving landscape of digital finance and politics. As the lines between these realms continue to blur, the potential for innovation is matched only by the risks and ethical considerations that accompany it. Looking ahead, it will be crucial to monitor how these developments shape not just the financial markets, but also the political discourse in the years to come. In a remarkable surge indicative of the growing enthusiasm for cryptocurrencies, the CME Group reported a staggering 129% increase in its crypto derivatives trading volume for April 2025. This impressive growth has been largely driven by Ethereum ETH, which has positioned itself as a leader in this burgeoning market. The CME Group, a significant player in the derivatives market, recently shared these figures, underscoring the increasing appetite for digital assets among institutional investors. In April alone, Ethereum futures accounted for a substantial portion of this activity, reflecting a shift in investors' focus towards Ethereum's potential, particularly following a series of network upgrades and protocol reform initiatives led by key figures in the Ethereum community, including co-founder Vitalik Buterin. Buterin's recent push for protocol reforms aims to enhance Ethereum's scalability and efficiency, positioning the network for a potential breakout. The recent upgrades are designed not just for immediate gains but to ensure Ethereum remains competitive in the long term, Buterin stated in a recent interview, emphasizing the importance of adapting to market needs and technological advancements. As Ethereum continues to innovate, analysts are drawing comparisons to Bitcoin's past performance. Ethereum's price is nearing a pivotal level that historically led to significant price movements, specifically a 450% gain observed during a similar phase in Bitcoin's trajectory. This correlation has ignited speculation about Ethereum's potential to replicate that success, especially as it approaches key support levels. Furthermore, while Ethereum's resurgence is noteworthy, the cryptocurrency landscape remains highly dynamic. Analysts are also spotlighting XRP, suggesting that its market capitalization could surpass that of Ethereum by the end of 2025. This projection stems from XRP's unique positioning and use cases within the financial industry, particularly as legal challenges surrounding its status as a security gradually subside. The implications of these developments are profound. For institutional investors, the increasing volumes in crypto derivatives signify a maturation of the market where digital assets are becoming integral to diversified investment strategies. The CME Group's figures serve as a barometer for this shift, showcasing a growing confidence among traditional investors in the long-term viability of cryptocurrencies. As the market continues to evolve, the interplay between Ethereum's innovations and XRP's strategic positioning will be crucial to watch. With regulatory environments also shifting, the next few months could be pivotal in determining which platforms will lead the charge in this fast-paced sector. As we look ahead, the ongoing advancements in blockchain technology and the broader acceptance of cryptocurrencies hint at an exciting future for digital assets, one marked by increased adoption and potential regulatory clarity. In a remarkable turn of events within the cryptocurrency sector, Solana has emerged as a formidable player, leading decentralized exchange DEX volume for an impressive 7th consecutive month. This recent development is not just a testament to Solana's growing popularity but also highlights a significant shift in the competitive landscape of the blockchain ecosystem, particularly in relation to Ethereum, which has long been regarded as the front-runner in the decentralized finance DeFi space. As of May 2025, Solana's DEX volume has outpaced Ethereum's,
showcasing its ability to attract traders and liquidity. The surge in activity is indicative of a broader trend where decentralized platforms are gaining traction among users seeking alternatives to traditional finance. Solana's combination of scalability and speed has made it an attractive option for traders looking for efficiency and lower fees, noted a spokesperson from a leading blockchain analytics firm. This sentiment resonates with many in the crypto community who have expressed a growing preference for Solana's infrastructure, especially during periods of high network congestion on Ethereum. Moreover, Solana's staking activity has also surpassed that of Ethereum, further solidifying its position in the market. According to recent data, Solana has attracted a significant number of stackers drawn by the promise of higher yields compared to Ethereum's staking rewards. This shift is partly fueled by Ethereum's transition to a proof-of-stake model, which has faced challenges in terms of user adoption and network throughput. A report by a prominent crypto research group indicated that Solana's staking rewards are on average 10% higher than those offered by Ethereum, a factor that has undoubtedly contributed to its increasing popularity among investors. However, the rise of Solana is not without its challenges. Market analysts have noted the looming death cross for SOL, the native token of the Solana network. This technical indicator, which suggests that the asset could face downward pressure, has raised concerns among traders who fear potential volatility ahead. While Solana's recent performance is impressive, the technical indicators suggest that caution is warranted, remarked an analyst from a leading crypto investment firm. As SOL struggles to maintain its value in the $150 range, investors are keenly watching for signs of recovery or further decline. In the broader context, Solana's ascent reflects a growing appetite for innovative blockchain solutions that can offer competitive advantages over established players like Ethereum. The DeFi landscape is evolving rapidly, and projects that can deliver on efficiency, lower costs, and user-friendly experiences are likely to thrive. Furthermore, this shift could spur Ethereum to accelerate its development efforts, particularly in enhancing scalability and lowering transaction fees. As the cryptocurrency market continues to evolve, Solana's ability to sustain its momentum will be critical. The coming months will likely see increased competition among blockchain platforms, with both Solana and Ethereum striving to capture the attention of traders and investors alike. With the DX landscape shifting and staking incentives playing a crucial role in user engagement, the implications of Solana's rise could redefine the competitive dynamics in the DeFi space. Looking ahead, the ongoing developments in Solana's ecosystem, including potential upgrades and new partnerships, will be pivotal in determining whether it can maintain its lead over Ethereum. As the market reacts to these changes, both platforms will need to innovate and adapt to meet the evolving needs of their users. The future of decentralized finance is poised for exciting transformations, with Solana at the forefront of this revolution.